Consumer price inflation in India jumped to a 6-month high of 6.3% in May. That breached the central bank's threshold of 6% for the first time after 5 months. Spurred by higher food prices, the May number also exceeded forecasts. May's high inflation was due to a low base effect and higher energy costs as well. Wholesale price data shows that fuel prices jumped nearly 38% on year. A record 12.9% advance in overall wholesale price index drove retail inflation even higher. And that tracks changes in the price of goods before they even reach consumers. And India joins China in reporting high inflation. Just last week, China's data shows that May factory gate prices rose at their fastest annual pace in 12 years. The producer price index jumped 9%. CPI, on the other hand, rose to their highest since last September. Investors are worried that the pandemic-driven stimulus measures could supercharge inflation. Apart from China and India, Japan is also facing rising wholesale prices. To tell us more on what the rising inflation across Asia means for the global economy, we're joined by Chidu Narayanan from a Standard Chartered Bank. Thanks for being here with us. Now, India's inflation, similar to China and Japan, came from higher wholesale prices. What's the outlook for India as the curbs ease?
Hi, Eugenia. Good evening, and thanks for having me. One very important point that you had raised in your earlier remarks were also that the low base effect, which has been pushing up inflation across the board. And as most economies were in lockdown last year, activity was scuppered. There was pretty much a massive decline in inflation. And given that low base, combined with the fact that we have higher commodity prices, and as economies are getting back getting to open up again, and as activity resumes, there's going to be a lot of pent-up demand as well. So a bunch of these factors which are pushing up inflation for now. We think that near-term inflation might be higher. Like you said, in India, we could expect inflation to remain quite elevated very near term. The same is the case in China as well. But we don't think that overall in Asia, elevated inflation really will become too much of a concern. It's going to be quite elevated, but we will need to see activity pick back up, demand pick back up, and economic recovery well underway before we start to get concerned about inflation.
And what about Japan? What is your expectation for Japan Cpi, which is out later this week?
For Japan, we do expect that inflation will remain fairly in the inflationary territory. It's still in negative territory, maybe slightly less negative than earlier. We think that maybe inflation might be about minus 0.2% versus minus 0.4% in April. But that being said, again, inflation hasn't really been a concern in Japan for very many years now, and I don't think it's going to be a concern at this point in time. Activity has slowed down a little bit, and consumer confidence has been quite depressed, which could weigh on demand pull inflationary pressures. And while relatively activity has picked up, it's still at very, very soft levels. So in the near term, we don't think inflation should really be a concern in Japan either.
Right, with inflation rising across most countries in Asia and an impending move from the Fed, will central banks in the region be forced to raise rates soon?
That's a good question. And with inflation higher, we've had that question earlier as well. But one thing that needs to be answered is this inflation permanent? Is it a bit more sticky, or is it going to be transitory? And is it driven by more demand pull inflation rather than supply push inflation? And for both these answers, both these questions, we think the answer is that it is transitory, and it's a little bit more supply side inflation at this point in time, particularly in Asia, where the dependence on food and fuel inflation is quite a bit higher than in the developed economies. And with growth being quite subdued and risks are more skewed towards the downside, given the vaccination rates also in the region remain quite low, giving rise to the potential for further increase in further waves of new infections, further increase in new infections. All of that points towards a little bit more of downside risk to growth. And with inflation also remaining quite transitory, I think that most central banks might choose to still remain quite accommodative prioritizing growth over transitory spike in inflation. But that being said, one of the central banks that could hike rates earlier than the rest could be the Bank of Korea, where growth has been quite strong. It is an export-driven economy, and strong exports has supported a very strong labor market recovery, a very strong pickup in consumption as well. So it seems that there could be some policy normalization in the Bank of Korea. But even there, the deputy governor has reiterated that it's more coming from these levels. It's not really a tightening of policy, it's more normalization.
All right. Thank you, Chidu Narayanan, for your insights there from Standard Chartered Bank.